It is another trading day. Welcome to Tuesday evening. We are back again to our charts to review the day, how the market traded against our levels, and how the market is trading as opposed to our draw on liquidity. Welcome once again, ladies and gentlemen. So, day has ended. Trading has closed successfully. And what you are seeing here is market trading below and back within the range of Monday, right? With this huge imbalance here, right? As you can see, yesterday I was expecting market to come back within to use the opening gap as a support to continue lower, but price rather traded first down without taking the internal range liquidity, right? Well, what you would expect normally is price to attack the internal range liquidity before it comes down to take out the external range liquidity. But in this case, price rather failed to take out the internal range liquidity on the H4. Then we go down to the lower time frame so you can see clearly. Yesterday, this is what I marked out, what I was expecting. Price rather traded down to take out the previous day's low. I would rather prefer if price had taken the internal liquidity first before dropping lower. But rather we saw a consolidation with price taking out the previous day's liquidity and then quickly running back inside of the range. This is one of the signatures that tells me that price is likely to come back, trade back in there before we'll probably see price trade down as a continuous as a continuation to this move here, right? So on the H1, we have price traded for the intraday. So yesterday price traded back here and then in here. So when market open, I was expecting price to trade above this into this level and then down. But you could see that there was an SMT, even though the Euro USD was running for the highs, dollar was still kept in consolidation. I mentioned yesterday that due to the large size of Monday's trading range, it is likely for us to see consolidation as well. So I'm not really surprised that today traded like this and also closed back within the trading range for Monday. Moving on to tomorrow, I would expect price to actually trade to close above this here, which would also confirm this as a proportion block. This is the main. This down candle here would be a proportion block. And so once I see price trade above this area here, right, we can then look for price to come back in and then watch how price trades once we get in the equilibrium of the trading range, right? So this would be our trade, our range high, and that would be our range low. So we'd expect price to trade back into the mean threshold or the equilibrium, and then from there we'd see how price trades. Maybe we get a continuation from there or not, right? So that's it for the dollar index. I would switch to USD, see how price traded. Show you. You see that yesterday I mentioned this wasn't there yesterday. Let me delete this. I left this one here and said that I would want to see price take this out and then trade higher. And if you remember quite, I left an alert here on this one saying that that is where I would like to um, see price come back to before a continuation. Ideally, I was expecting price to close above all of this consolidation, but not rather take it out. Right? I didn't engage this move because price on the dollar index failed to come back for the internal range liquidity before dropping. That is the only reason why I did not engage. Right, that's the only reason why I did not engage Eurusd, even though the exact scenario I was looking for happened. I was also watching price, waiting to see that once the news hits, this retracement could drive price to close above this and then continue higher. But also I had in mind that today is Tuesday, there was news and there's also big news coming ahead. So this day could be used as consolidation ahead of the big news release. And so part of the reason why I decided that the conditions were not favorable for me. And so even if what I'm expecting is happening, I'll not engage. So on the dailies, let's see where we stand, what we can expect. Given we are expecting a retracement on the dollar index, I would also love to see the same thing happen on Euro USD. So if you can see clearly, the inefficiency level that I marked is still holding price. Now we have a bullish inefficiency level also on the dailies. And so what I would rather look for is price to perhaps trade into the inefficiency level and then see how price trades from there. All right. So that's it. This is the inefficiency level left on the dailies. So if price continues to remain bullish, as we have seen, we'd like to see price dip into this inefficiency level and then straight for buy side liquidity here, then here, if there is momentum. Switch to the GBPUSD. GBPUSD also left an inefficiency level here on the daily. So now we have a balanced price range. This here has been flipped to this. So price traded above this on Monday, and then we have Tuesday trading back to it. Right. So let me get that. See, this is it. Right. This here, and then price traded up, and then now price has traded back into it, with price leaving this bullish inefficiency um, level here. Okay, so that is where I would expect price to um, trade into, and also expect price to hold based on how the market trades on the lowest time frame. So I would love to see price turn around here for the buy side liquidity where I've marked this is my target for the rest of the week. If there's any more momentum, I would love to see price go all the way to that point. Okay. And if price is using this low to this high with this as the retracement, then it means that ultimately I would love to see 1.37, 1.387 as the ultimate target on the days, right? But in the meantime, this and perhaps that would be our target. I am using this because there's an inefficiency level here that has been flipped. And so price would likely see a reaction here when we trade to it, right? Giving it's also a high on it's an old high on the days, right? So that will be it. I hope this has been very clear. Let me go back to dollar index, clean it up. up. Right. So basically, what I'm expecting still holds, only that it didn't happen on Tuesday. Tomorrow's Wednesday trading. We have this inefficiency level. Also, the opening gap still forming, still could be used as a resistance level for price to see lower, right? There's an opening gap I marked here yesterday. It's still going to be a near-term target for the downside. Right? So I hope this has been helpful. It's quite short. I try to keep it very short, simple and concise. Right. So let me know what you think. Let me know what you have, any suggestions you have for my videos. I would welcome them in the comment section. Thank you so much for your time. I'll see you tomorrow.